All right, welcome back, everyone. We can go to another great topic as usual. Of course, my co-host is Julie. How are you, Julie?
I'm feeling. How are you this morning?
Fine, thank you. Thank you. We have a little bit of technical issues, but the show will go on. So without further ado, everyone, let's my headline today is everyone as a real estate investor, I highly encourage everyone to focus on your quote personal economy, end quote. Oh, look, a lot of our investors, especially newbies, and still many so-called savvy investors this past 24 months, they have gone through a lot of challenges. And so once again, Julie, you and I are trying to help people overcome your challenges, invest in real estate as soon as possible without further delay, but subconsciously and excuse wise, which is so many excuses out there. And here are the following challenges that every investor faces at this particular challenging economic environment and housing market challenges as well. So here, let me give you a list of the excuses, whatever you call them. So here they are. Okay, first of all, you cannot control the economy. We have no
Correct.
control, right, Julie? Some of the concerns and fears that people have are, oh, I have to wait until the election is over later this year. Oh, inflation. Oh, I need for the Federal Reserve to confirm that the inflation is going all the way back down to 2% before I buy investment property or primary home, whatever the case may
Right.
be. There's a threat of recession. We've been hearing about the potential recession for the past few years now. So I'm very scared. I want to wait till any kind of recession is over before I invest in real estate. And then people say, I'm waiting for the real estate crash. I want the housing to come down to 50 to 60 to 70%, just like the 2008 global market crash.
Right.
So right now I cannot afford it. I cannot afford to buy a house. I need the house to come down in value. Otherwise, I will continue to sit in the sideline for the rest of my life. And some investors say, oh, right now the houses are overvalued. I'm going to wait until the crash, 30, 40, 50% crash of housing prices before I will buy investment property. And then some investors are thinking, I'm waiting until the correction is over. I see, although the real estate market has been going up year over year for the longest time, even the past few years, there's still some market have gone through some 5-10% correction, whatever that's going to be. And then some of the people, they're going to say, oh, I'm going to wait until the mortgage rate to come back down to 3 or 2% before I will buy investment property again. I can go on and on. So before we go on to the next slide, what are your thoughts about all this list of
It's interesting. I think if those are the reasons or excuses or whatever that you're getting as a mentor, why people don't want to invest, one or more of those things is always in play all the time. If you think about it, there's no perfect economy. It's either the rates are too high, the rates are too low, there's too much inventory, not enough inventory, whatever. Yeah, based on all that, you would never make a decision, which is why you say you got to have your own personal economy.
That's right. Yeah, focus on your personal economy, focus on your financial goals, and we can control our personal economy. We cannot
Absolutely.
control all the issues we just talked about.
Right.
So that's what we're facing, right? We're facing analysis paralysis with
Yes.
people facing fear, people staying on the sideline, people trying to time the market. Historically speaking, we can never time the market. But by the time you think you time the market, you enter the market, the house market is already bypassed you,
Yeah, that's it.
right?
That's it.
Yeah. So
True.
yeah, it's very sad. Let me share with you why a successful investor over the years, of course, I've been doing it for several decades, creating my portfolio. The video that I did recently, I buy in any kind of market. As long as I buy in a good market, good location, my numbers works out. I don't care.
Right.
I have documented my real estate investing journey. Some of the video that I've done recently, with or without you, I document my investment journey, and I guide several hundred investors, real estate investors from all over the country to buy the kind of property, cash flow properties in a good growth markets. Yeah, so I use the contrarian approach. I use the don't follow the herd, HERD, the
Right.
herd mentality. Because like you said, Julie, if you wait, if you use this kind of excuse to to become perfect, to meet your unrealistic expectation,
Right.
guess what? You'll never buy. You'll never
Exactly.
take action. You never execute what you plan. Am I right?
That's absolutely true. Yeah, you're absolutely right.
So let me tell you another reason why rental property is can overcome all those issues. Okay. You and I discussed this many times on our podcast for several years now, and it bears repeating because repetition, I call it the repetition, is the mother of all learnings. What I mean by that is by continually deprogramming you and I, by deprogramming real estate investors' mindset and give them some positive energy, give them some positive thoughts, and repeated these blueprint strategies. And now you and I have many blueprints, real estate investment strategies. And this particular slideshow is a true factual information. Rental property is history's most attractive and most powerful multi-dimensional real estate investment asset class.
Hmm.
Because you make money in four ways, not just cash flow. Okay, cash flow, tax benefit, appreciation, and leverage. And we dive deeper into this each of these categories in a number of the podcasts that you and I have done together.
Yes. Yes.
Last year. So let's not repeat that. People want to learn more about these strategies. You can, of course, you can subscribe to my YouTube channel, or better yet, you can put your email into my website below in the body of the description, so you can become our free member subscriber to Investment Network. All right.
Right.
So without said, this is something I came up with. We're going to discuss this quite a bit. It goes hand in hand. It goes hand in hand with the previous strategy we just mentioned. So, Julie, I want you to present this particular slideshow, which I just updated recently. So go ahead and
That's really awesome. I love the slide. And I love the example that you use as an iceberg, because as most people know, if you don't know, 90%, pretty much 80 to 90% of the iceberg is underneath the water. We only see what's on top, but then remember the Titanic, right? Back to in terms of investing in property, the two things I think people tend to look at the most are what's above the iceberg, which is the income, the cash flow, which is really all I was looking at when I first started this business, before I really understood all the other benefits by working with you. And then the appreciation, obviously, those of us that live in Southern California and other high appreciation areas know that appreciation that's how a lot of people make their living, on appreciation. So those are the two things I think generally, particularly inexperienced investors, will look at. But then you have to look at the tax benefits, the depreciation tax benefits, which are numerous depending on what type of property that you buy. You can also leverage, which we did. We were able to buy twice as many properties by leveraging it with a 30-year mortgage. So we were able to, with the resources that we had, with the assets that we had, we may have been able to buy two, but because in all cash, but because we chose to leverage it, then we were able to buy 4 properties, and then 2 more properties in our retirement account for a total of 6 properties. And that's a whole other class. If you want to learn about that, you'll have to come back. And then obviously the principal buy down, with, even though we've only had them a short time, we can definitely see the principal balance is going down. And because the particular properties that we bought are smaller loans, we should be able to pay those off very quickly to be able to take advantage of everything that's involved in your chart here.
Yep. Agree. Very put. So I will recap this particular slideshow by saying that, yeah, most of your profits over time is below the surface, below the iceberg. So when you buy your first and subsequent rental properties, you are entering the tip of the iceberg.
Absolutely. Absolutely.
Yeah, exactly. Let me give you one quick example, and we can conclude within 5 minutes. So I don't want to go. So, for example, obviously, you have to determine what type of property to buy. So we'll give you an example in which we practice and we preach over many years. We buy turnkey properties in high growth markets, good population growth, job growth, low affordability, entry-level type of homes, preferably new construction, ideally, right? If you can, where you can cash flow, where you can cash flow with 25% down payment. So regardless of the mortgage rate on your loan, as an investor, you're not a primary homeowner. You are an investor. So you're not using your emotions. You're buying a asset class. You're not live there. When you buy income property, a lot of newbies, especially, they don't know how to create the proper mindset. Get the emotions out of the way. You are buying an income producing asset. So again, take the emotions out. You're not living there. So you look at the numbers. I look at the numbers all the time. If you could do a 20 to 25% down payment, regardless of the mortgage rate, as you can see here, this mortgage rate is projected to be, you don't see it here, as 6.8%, whatever, but you still can cash flow. But if you can always, they took the rate, but you marry the income property, all right?
Right, absolutely.
You can always refinance the property when the rates come down into the future. So having said that, I'm going to prove the point that the previous slideshow we discussed the 5 dimensions of a profit bucket as we can speak. So you buy this brand new construction for $150,000, doesn't matter, but we have the property in Oklahoma. But nevertheless, you look at the numbers, the gross rent and everything else, 20% down payment, you still have several $100s of monthly cash flow. So that's a foundation building. So some people saying, oh, I'm spending $33,000 down payment just to get $239 of monthly positive cash flow. I'd rather invest in a CD.
Right.
Those are ridiculous comparison. It's not apple to apple comparison.
No.
Therefore, people that use this philosophy, they need to become a member of our network so he can work. So we can reprogram you to think differently. Because any regular assets, mutual funds, stocks and bonds, anything out there, you don't get the 4 dimensions that we just discussed, right?
Right.
Furthermore, I know cash flow is very, very low at the beginning, but you're buying at least 5 to 10 years before you truly see the wealth building aspect. So a slow grind, okay, is not a get rich quick scheme. It takes a 10 to 15, 20-year journey before you reap the financial benefit. And a lot of people, you and I talk about this a lot. We have a property tracker software that would track our numbers on a year-over-year basis, but most investors, newbie or not, they just don't know how to calculate the projection. You need to use a investment software. You and I use property tracker all the time, but there are other simple software where you can track all the 4 dimensions of your investments over time. So year 1 to year 10. So I'm not going to go over the number by number. We have other videos that we have done. You can, again, I encourage people to click our YouTube channel so we can dive deeper on very specific numeric analysis. But from a high level, we only have a few minutes left. 10-year projection. So if you project 3% inflation, 3% rent growth year over year, your rent is going to go higher. You can get more rental cash flow. Julie, can you finish up on some of these important categories? Cash flow increasing. What other factors that will really yeah, go ahead.
One nice thing about, I'm looking down the lower third of the page. First of all, understanding that with a fixed 30-year mortgage, your mortgage payment stays the same. So that never changes. Unlike some people have gotten tied into these adjustables and can really mess you up. But what happens is because the mortgage payment stays the same and the property value is not only increasing, but your loan balance is going down. So that will increase your cash flow. So if you look at the little cash flow line down there, you can see that every year the cash flow is increasing. Again, that's one of the main reasons people get into real estate is because they want the cash flow. So you can see where actually the longer you keep it, the more cash flow you will incur.
Yeah, this screen I'm unable to show the lower portion of these numbers. The lower portion go over the tax benefits a little bit and the appreciation over time. But so what I'm trying to bring, the point I'm trying to bring, Julie, is that on the earlier slideshow, we discuss about the dimensions. Let's go over. Some people thinking, some investors are thinking, oh, I cannot buy right now because some areas of the country, or what if your property go down in value? It does not matter. As an investor, even worst case scenario, your value goes, you lose value a little bit, which is, I don't anticipate that's going to happen. It's not happened yet.
Right.
Past 2 years, because we still have good fundamentals. We still have a low supply of inventory and still high demand.
Right.
With the mortgage rate decreasing as we speak to currently 6.34%, right? Mortgage rate, and the mortgage rate is projected to decrease for the rest of this year and into next year, when the Federal Reserve going to cut their rates several more times in 2025. Some people project, we don't know, no one have a crystal ball. Some people project that the interest rate could go down all the way to high 5%, 5.8, 5.9%, maybe in the latter part of 2025. When this decreasing mortgage rate, it'll steer up, it'll create demand, to surge. So a lot of people can get off the sidelines. Okay, let's take a worst case scenario. Even if you probably lose value, you're still freaking collecting your cash flow, right?
Absolutely.
As an investor, you're not impacted by the volatility of day-to-day situation. You invest for the long term. So as long as you get your property rented, as long as you're collecting cash flow, as long as you're collecting the tax benefits, and the tenants pay down your loan systematically month by month, the returns, the external returns of the cash flow, and the internal IRR, internal rate of return on below the surface, which talk about you don't see it, right? The tax benefit, you can't really see it really, and the loan reduction, the debt decrease, the tenant that you're gonna leverage, your tenant gonna pay down your debts, your tenant rich for that matter. So so it doesn't matter because you're investing for 7, 10, 15 years down the road. Anyway, so my takeaway. So now getting back to all the excuses, inflation, crash, and all this kind of downturn and mortgage rates, really. So yeah, that's my takeaway. So what's your final takeaway, Julie?
I think you got to really get past the excuses. And again, like you said from the beginning, create your own personal economy. Figure out what you want to do. Don't get caught up with the emotion. I heard you say that earlier. And I just stick with the plan. I understand it's a long-term plan. It's not going to be like you turn a profit in 30 days or whatever. Just understand it's a long-term plan and realize that the longer you hold it, the better the benefits are. The more benefits that are created over a long period of time. And so I don't think you can lose. But if you're looking to do something in the short term, this is probably not the business for you.
I totally agree. So get rich quick slowly and just slow grind.
Slow and steady wins the race.
That's right. Slow and steady wins the race. Okay, very good. The audience out there, if you see any value whatsoever from this podcast, please like and subscribe to my YouTube channel, and also comment below what you think of our strategies, what's happening with your situation as well. Please comment below. And finally, as I mentioned before, just as I mentioned before, just go through the process, take action. And of course, I have the coaching and mentoring service available. And here's my contact information. If you guys wish to reach out to me, I'll be glad to help you wherever you're located in the country to buy turnkey, long distance cash flow properties surrounded with some great team, great property management, very outstanding system, right, Julie?
Absolutely, 100%. A lot of help there that can really make a difference in your life and really change your life, turn your life around.
That's right. All right, with that in mind, thank you so much. See you guys next time. Thank you, Julie.
Bye-bye.